Hey guys, welcome back to Sharks Academy, and in today's video I want to share with you the post analysis for dollar yen. So we have two trades to talk about, and this one would be the initial entry that we had. You can see this was fired just a few minutes ago. Updated the screenshots on our live entry onto Discord channel and Telegram. Please go and take a look. Otherwise, this is why we actually took a trade over here. You can see overall this move is still bullish, right? And yes, we are bearish at this point of time because this level over here didn't tap into POI just yet. So now we are finding a valid entry for buys into potential sells. Okay, this is valid. If you want to be a seller, based on this H4 area, you want to sell at a premium level. You want to sell high. You potentially want to sell here at the very least, or use the 50% and sell at a premium, right? So this means that we are able to use the lower time frame change of character on the 15 minutes to look for buys onto this very valid demand area. So this is what we did. Okay, prices give us a change of character. Can you see over here? We sweep the lows. We have a high over here. So you can argue that this is a high, but this is not a significant high. Okay, change of character. Came back down. This is where we got our entry. Alright, and this is a 5 minutes demand. Can you see this is a 5 minutes demand? And this isn't just any demand. This demand actually reacted off a supply zone. And this failed to create a lower low and broke structure. Right? And this is where we had our entry. Stop loss beneath this demand. And I understand that prices can easily come back down, mitigate deeper areas before moving higher. And that's why I had two entry positions ready. Okay, at this point of time, I'm not going to enter this anymore because prices broke structure again. So typically prices should come back, mitigate some sort of demand here to go higher if the bullish order flow wants to be continued towards the upside. So now I'll remove this. Okay, so this is how we got our first entry, and typically you may want to cover the entire strong low because this is ultimately the low that created the high. So prices can be bullish here, can be bullish here, can be bullish here. And that is why some traders actually use the entire stop loss. But you can see clearly this is just 1:1. And you have an 18 pip stop loss, which is pretty huge. Alright. And that is why I split my positions into two. I'm ready to fire one over here and fire one over here. So this get me a 1:3.7, and this would have gotten me a 1:2 at the very least. Okay, and I'm satisfied with that. And this is just TP1. And of course, TP2 would be the next high over here. Right, this will be my second target, and I'm now break even. I shifted my stop loss here. Okay, if prices decides to come back down, then I'll get stopped out, and it's fine because I've partial 80%. Right, and this will be the target around this level. You can even use this swing point, okay, and you can even use this high. All of these are fine. So, did we actually get involved in this beautiful 1:16? Sadly, we didn't. Alright, I was greedy. I was looking for 1M supply. Right? So the truth is that I had my down limit order at this supply zone over here. You can see we missed it. Alright, we completely missed it. It's not even closed. Alright, this would have been the entry. This would be my stop loss. And I would have targeted the low over here. Right, this 1:23. We missed this trade, and prices went on to tap the 2 minutes supply area. This is a 2 minutes buy to sell, right? Mitigated perfectly over here. So can you see? This is not coincidence, okay? This is planned. So how do we get this trade idea? Similarly, on the H4 time frame, at this point of time, this was a break of market structure. Prices came back up. Yes, strong movement. But based on market structure, we are still bearish. And all we need to do is to wait for 15 minutes change of character. So this was the 15-minute shift. Lows, high, low. Some of you may even use this low. Fair enough. Alright, in this case, it doesn't matter because prices broke fully. Came back up. This could have been your first entry. Okay, not the best, alright, but prices create a buy to sell. Right, this is a buy to sell. Can you see? So we can use this entire zone. It really depends on how you manage your trade. If you are prepared to fire two entries, then this is your first stop loss. Alright, and this is 1:5. Otherwise, if you were to cover the entire range, then this is just barely 1:1. All right. And in this case, you wouldn't have gotten stopped out because you covered the entire range. This is the high, they created the low. So as long as this isn't breached, you are bearish. Okay, otherwise, this would be your first target if you were to take an entry over here. And this, fair enough, 1:2. Okay, not the best. And of course, the best entry is over here. This is the extreme of the 15M change of character. This is bearish. Okay, so now can you see that prices is building liquidity moving into this level? At this point of time, if you are confused about the market, right, you realize that, okay, now my 15M over here initially was bearish. Came back up, starts to potentially accumulate. What you want to see is another 15M shift in structure. This is the high, this is the low, this is the high. So if you didn't place a sell limit over here, you could have waited for a break of structure here. Right? We took out the lows that created the high. That's the first sign. Came back to this supply zone, and this is where you could fire another trade. So I think this was the 1 hour supply, right? So let me just remove this. This is the 1 hour supply. Depends on how you manage the trade. This is actually the strong high. Okay, so stop loss above the high over here, and you could have targeted this as your TP number 1, right? So if you are not satisfied with 1:1.7 as your TP1, then just use the 50% mitigation over here. And all of a sudden, your TP1 is 1:2.5. Right, partial, take more profits here, and that would be it.